we can see tax is a compulsory levy imposed by government to provide government infrastructure. So the concept of taxation, when we look at it, is coming together and providing funding to run government. Having elected a government to lead the citizens and to run the country, the citizens have the obligation to also provide the funding for government. And that is where the concept of taxation comes in. So it's a contribution by the citizens, and must be levied by government. So when you look at the definition of what is tax, we say tax is a compulsory levy or a compulsory payment levied by government in order to fund infrastructure and every other government services. So I would like to also speak about differentiating tax from some other payments. So the classical definition of tax, according to the Nigerian national tax policy, provides that tax is a payment paid to government without any form of return or service provided by government, whether it is called a tax or not. So what we mean when you say that is when you give government, you pay money to government to pick up your refuse, you cannot classify that as a tax. So we need to separate between the charges we pay to government and the taxes we pay. So when we say who is a taxpayer, we have what we call the grand norm in Nigeria. That is the basis for every thing we do as Nigerians. And tax is actually a law. So something must provide for tax before it is. And the Nigerian National Constitution in section 24 provides that a taxpayer must declare his income truthfully and pay to the relevant government agency. So in a nutshell, everybody is a taxpayer. The question of who collects taxes also can be traced to Nigerian National Constitution. The Constitution provides the basis for also the administration of taxes. Now, because Nigeria operates what we call a fiscal federalism, which means that every level of government can administer taxes within their jurisdiction. You have the capital gains tax from companies, you have the value-added tax from entire Nigeria, we have the stamp duties. The state government also collects what we call the personal income tax. Personal income tax is also collected by federal government, however, is limited to foreign non-resident employees and Nigeria Armed Forces. Also, Nigeria collected taxes from Nigerians in foreign mission. So, because they are classified that they may work in any of the foreign mission or may not be stable within the country. So FRS, federal government collects taxes from them. The local government also collect taxes. Now we have taxes like the municipal taxes, we have taxes on cattle, we have taxes on farm produce, we have taxes on street naming, we have lock-up stores, we have on and off liquor. So we have some little taxes which the local government also collects. By and large, the three levels of government have the power to collect taxes in Nigeria. I already said tax on income. When we talk about tax on income, who is involved in earning income now determines. We have what we call the company's income tax. The company's income tax is a tax type paid by every company on the income they earn. It is a tax that is paid annually by companies. We have also what we call the capital gains tax. The capital gains tax is also a tax paid on gains from disposal of taxable assets. We call them chargeable assets. So if a company disposes its assets, that is assets that he bought for the purpose of business, he will be liable to pay capital gains tax on the gains received. We also have what we call the stamp duties. The stamp duties is a tax on instruments, on transactional instruments. And so or on agreements, I say on agreements. So when two persons enter into an agreement, stamp duties is a tax that you pay in inviting government to be part of that agreement. So stamp duty is also paid by companies and also by individuals. Value-added tax is also a transactional tax. We call it a consumption tax. Value-added tax is introduced to moderate consumption. It is introduced to control consumption. So you pay value-added tax whenever you consume a taxable product. Now, taxable product, almost every product is taxable under the value-added tax law. However, government has given the Minister of Finance the power to modify a schedule in the Value-Added Tax Act to exempt goods and services that government may deem necessary to support the citizen. We also have some other taxes, like we have what we call the tertiary education tax. The tertiary education tax is the tax introduced to support tertiary education in Nigeria. It started first as what we call the education tax. However, in 2011, it was modified to just cover the tertiary education, being that the federal government's responsibility in education is limited to tertiary education. So federal government collects tertiary education tax, which is used to fund tertiary education in Nigeria. Now, let me also speak about what we call the National Information Technology Development Levy. Now, this is also paid by companies, but it's classified. Companies that are into either banking, insurance, telecommunication, internet service providers. If you look at the Act, there are people who directly use telecommunication service or internet technology. People who directly use technology are encouraged to pay such taxes for development of technology infrastructure in Nigeria and also technology penetration in Nigeria. So, however, only persons who have a turnover of about 100 million and above are expected to pay that tax. We have what we call a branch of the stamp duties, which is called the EMTL. It's worthy of mention because it is one of the revenue generating in Nigeria at the moment. The EMTL is called the Electronic Money Transfer Levy. So it is a levy payable on every electronic transfer in the financial institution. So it is a 50 naira that is chargeable on every money deposited in financial institutions in Nigeria, and it's paid by the receiver. So we have the electronic money transfer levy, which is 50 naira on 10,000 naira and above.